Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CASTLE Biosciences Inc. quarterly report. CASTLE Biosciences provides a range of molecular diagnostic services for various medical conditions. Their business includes cancer diagnosis and treatment solutions, plus uveal melanoma, DecisionDx-Melanoma, DecisionDx-UM plus cutaneous squamous cell carcinoma, DecisionDx-SCC plus melanocytic lesions, MyPath melanoma plus Barrett's esophagus, TissueCypher mental health conditions, plus pharmacogenomic test for guiding optimal drug treatment, ID Genetics for major depressive disorder, schizophrenia, bipolar disorder, anxiety disorders, social phobia, obsessive-compulsive personality disorder, post-traumatic stress disorder, and attention deficit hyperactivity disorder. CASTLE Biosciences Inc.'s stock price has experienced significant drops over the past year due to a combination of financial strains, missed earnings expectations, and concerns over Medicare reimbursement. Key factors contributing to these declines include loan covenant restrictions in 2024, limiting the company's ability to manage its finances, pending Medicare reimbursement issues for the DecisionDx-SCC test, which could eliminate Medicare coverage from April 2025 onward. Missed earnings expectations, including a loss of $0.20 per share in the first quarter of 2025 and a net loss of $0.5 million in the third quarter of 2025. These factors have resulted in a 33% loss for shareholders over the past year, with a more recent monthly drop of 28% and a weekly drop of 10%. The company's lack of profitability in the 12 months leading up to August 2025 has also contributed to its declining stock price. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth is primarily driven by strategic acquisitions, such as the acquisition of Previse in May 2025, which contributed significantly to revenue growth. Additionally, non-dermatologic segment growth and the success of various cancer diagnostic tests, including DecisionDx-Melanoma and TissueCypher, also drove revenue growth. On the other hand, revenue decline was primarily due to a decline in the dermatologic segment and the loss of Medicare LCD coverage for certain tests. Furthermore, lower realized average selling prices, ASPS, for some tests, such as the DecisionDx-SCC test, also contributed to revenue decline. Net income and profit margins experienced fluctuations over the given period. Initially, net income increased by $8,920, $2,269, and $4,523 due to improved operational efficiency and reduced expenses. However, a significant decrease of -$501,000 in Q3 2025 compared to a profit of $2,269,000 in Q3 2024 indicates a decline in profitability. Profit margins also showed improvement due to decreased expenses and increased net income. Nevertheless, a loss of -0.6% in Q3 2025 compared to a 2.6% profit in Q3 2024 signifies a decline in overall profitability. Furthermore, gross margin percentage decreased from 79.2% to 74.7%, indicating a reduction in revenue generation efficiency. The mixed trends in net income and profit margins suggest that the company faced challenges in maintaining consistent profitability despite initial improvements. The decrease in gross margin percentage and loss in Q3 2025 indicate underlying issues that need attention for sustained growth. The company is indeed generating positive operating cash flow. According to the financial summary, in both 2025 and 2024, the net cash provided by operating activities was substantial, with $37,416,000 in 2025 and $40,501,000 in 2024. This indicates a consistent ability of the company to generate sufficient cash from its operations, supporting its overall financial health. The company's financial summary reveals significant changes in its debt level and interest expenses. Notably, the company's total debt has surged from $0 to $10 million. This substantial increase is largely driven by a rise in long-term debt, which increased by $304,000. Conversely, interest expenses have decreased significantly, with a notable drop from -$201,000 in 2024 to -$24,000 in 2025. These changes suggest that the company has taken on more debt, but is now paying less in interest expenses, indicating potential cost savings or improved financial management. Management is optimistic about the company's future prospects, citing sufficient cash to fund operations for at least 12 months, and plans to drive revenue growth through new product launches, commercialization of existing products, and strategic acquisitions. Key strategies include investing in R&D activities, prioritizing commercialization efforts, and pursuing capital expenditures for a corporate headquarters project. While acknowledging potential challenges associated with growth, management is focused on navigating operational complexities to achieve long-term success. The company has made several strategic acquisitions to expand its offerings, including Capsulomics twice, in no specific date mentioned, in May 2025, Myriad MyPath Laboratory, May 2021, Cernostics, December 2021, Althea DX, April 2022. On the other hand, the company has also divested some of its assets, including a D-genetics test, discontinued in May 2025. Supply chain disruptions. A growing concern. The financial summary highlights concerns about supply chain disruptions, which could impact the company's performance. Ongoing conflicts and economic sanctions, page 72, are contributing to these worries, while macroeconomic developments, page 45, also pose a risk. Furthermore, supply chain disruptions are identified as one of the potential risks affecting the company, page 71. These concerns underscore the need for proactive measures to mitigate potential disruptions and ensure business continuity. That concludes the financial summary for CASTLE Biosciences Inc. Feel free to comment below, and I will be happy to answer them when possible.